Good afternoon, everybody, and welcome to another edition of Wednesday Live. I'm going to make it as brief as possible, but it's loaded with a lot of content that is going to help us in one way or the other. I receive a lot of messages from guys who says all they have to look for is just to go to 1 hour time frame, look for impulse, then look for correction to maybe 50 to 61.8, and then take their trade. Like for instance, this is impulse. You see the impulse leg down. You see the correction to 50 or 61.8 right here, guys. And then to them, you just have to take a sell from here to the downside. Okay. Well, I taught you look for impulse, you look for correction to that level and sell. But there are things we learned before that stage. You remember we learned time frame analysis. Okay, time frame analysis. So essentially, what we are going to be discussing today is the relevance of structure before entry. Structure before entry. Let me write it. Structure like this. STRUCTUR. This is structure before entry. This is entry. Okay. So this structure, in terms of my trading system, this structure is work hand in hand with higher time frame, with your direction. Higher time frame. Okay. Higher time frame. And that is your direction. Okay. And then your entry is your entry here. Work with what? Smaller time frame. Smaller time frame, which is for what? For entry. Okay. So if you are looking for impulse, you don't look for that impulse in most cases in higher time frame, because in structure, when you are relating structure with whether impulse or correction, when you want to take trade at the level that matter, all right, you don't look for impulse and correction in structure, because the market must have moved away, and oftentimes we try to catch it. Do you understand? That was the reason why I thought candlestick pattern that matter, so that as soon as you see this candlestick pattern that matter at that critical level, you know that in as much as your structure is complete, you have that candlestick that matter, you are done with structure, you are done with higher time frame direction confirmation. What you are interested in at this level is to come down to your entry time frame and look for impulse. And look for impulse. And the impulse that you are getting in the lower time frame is still at the level of supply or demand of the higher time frame. The impulse and correction you are looking for in your entry time frame is still at the supply or demand level of the higher time frame. I wonder at this level, I wonder why some guys will just use a single time frame for their analysis, for their entry, you will be confused. You wouldn't know where the market is going. There is need for you to have a structural confirmation as per your direction in the higher time frame before you are even looking for any impulse and correction for you to enter. Do you get now? Let me look for an example. Let me see if I can find a perfect example to illustrate this point. Let's go to Euro AUD. Yes, let's go to this one. Let's go to this one. Okay. I'm going to illustrate it based on the buy and on the sell. Are you okay now? I'm going to illustrate this based on the buy setup as well as the sell setup that we are expecting. Okay. Of course, you know, if we have to, if we have to analyze this pair based on top-down analysis, you know, we are having this impulse, we're having 3 waves up, then we are having this move to the downside. Everybody knows that we are looking for downside in Euro AUD. Okay, and even based on fundamentals, we are looking for downside. But now, if you go to weekly, all right, can you see that on weekly time frame right now, you are seeing you saw this coming, hold on, you saw this impulse, saw this correction, saw another impulse, you see another correction, you see a move. It's not like impulse because it didn't break this low. You see this correction, you see this drop down. So this drop down is a fine one, guys. It's a fine drop down. So you need this drop down to at least correct to 50 to 61.8 before you can see another leg lower. Can you see? Have we gone to 15 minutes, 1 hour now? No, we're on weekly. Weekly is telling us that even though we want to move to the downside, this downside is not ready yet. And if you look at it, if you take this fib from here to here, all right, we are getting right here, guys, we are getting 50 to 61.8 at this level. Can you see? So now, if you want to be interested in the sell, what you have to do is simple. You get to wait for this pair to get to this level. Okay, let's go to daily. You see it now? You want to wait for this pair to get to this level. This level we have marked 50 to 61.8. You want to wait for it. This daily time frame. And then when you wait for it there, you want to see that this structure here should have been completed, 3-wave structure. So in terms of impulse, correct, sin. In terms of correction, sin. You can define your correction. Remember the entry, 4 rules for entry. You see the impulse? Yes. You see the correction? You can define it. You understand as it is formed? Yes. Is it up to 50, 61.8? Yes. If it is zigzag, is it up to 78? Yes. As soon as you see this, the next thing you have to look at is that you must see what is called a selling pressure. A selling pressure. And selling pressure is indicated by either maybe a railway or railroad track, or maybe you are seeing an engulfing candlestick pattern at the structural level. Where is the structural level now? This is the level where this corrective structure is deemed to have been completed. And that is why you are now seeing an engulfing candlestick pattern here. All right, engulfing candlestick pattern here, bearish engulfing. As soon as you see this bearish engulfing here, what is telling you is that this structure is over on this higher time frame. All you have to do next, guys, all you have to do next at this level is you now go back to 1 hour time frame. I don't know if your direction time frame is 4 hours. This is the same way this is just a model. If your own higher time frame is 1 hour, fine, do your 1 hour like this. But in that case, your entry time frame must be like 15 minutes, 5 minutes. Go ahead and execute the plan. It works for everybody. But myself, my direction time frame is monthly, weekly, daily. I settle for what I'm doing. Okay, I love to see my confirmation like engulfing on daily. I don't want to see it on weekly, because this weekly, the engulfing on weekly will be too far. The impulse on 1 hour will be too big, and even in some cases, introduce some other correction along with that impulse. I don't want to see that. Daily is okay for me. Once I see the engulfing pattern here on the daily time frame, what next? I go to 1 hour. And let me tell you something. When that engulfing pattern is formed on daily time frame, if you go to 1 hour time frame, you will see a very fine impulse, with which you can fib it to get a retracement to 50 to 61.8. Do you get now? You can take a fib and get a nice entry as 50 to 61.8. And if it's a zigzag corrective structure, you get a nice entry at 78% retracement. So that is it for this one. So you are waiting for this pair at around 55, around this level. All right. And when this pair gets to this level, look for engulfing candlestick pattern on daily. If you trade daily, weekly, monthly as direction, and you trade 4 hour, 1 hour as entry, then look for your entry in 1 hour. It is on 1 hour you are looking for impulse and correction. And I'm confirming to you that in as much as your daily has given you engulfing, a clean engulfing candlestick pattern or railroad track, whatever you call it, is the behavior that is important to me, not the name. All right. Once it gives you that one, go back to your entry time frame. You are going to see a fine impulse there. You can even place a sell limit at that level, but make sure that your stop loss is above 78% retracement. All right. Because if you are thinking of 50% retracement, what if you form 78? What if the correction is a zigzag? It means it's going to jump to 78. And if you are just putting your stop loss above, it will hit it. Do you get now? So that is how you go about it. You can see now structural completion before looking for entry, not looking for direction, looking for entry in the same time frame. It's not going to work that way. Do you understand now? Okay, so let's now go to let's look at gold. All right, so if you look at gold monthly, can you see we are right at the top? No investor anywhere in the world, guys, serious investor will not buy gold at this level. Serious one. All right, when gold was here, no serious investor will buy. Now it moves and make a three-wave structure upside. No serious investor will buy gold here. That is why it's been difficult for gold to what? To buy. It's been extremely difficult for gold to buy. Do you understand now? No serious investors will buy gold at the present level. So if that is the case, what should we be expecting? In monthly, we are at the top. In weekly, can you see? So we can identify some structure here on the weekly, because if you look at this market, after that move to the upside, you have had your three waves down. You have 1, 2, and 3. You have your zigzag to the upside. You want either 1, 2, or 3 to form a WXY, or 1, 2, 3, 4, 5. Anyone will do. But this is a move to the upside we are looking for in gold. Okay? If gold can step down to this level, guys, then that would be great to buy. This is weekly. That would be great to buy. Investor can put their money. Something that was as expensive as 1964 is now coming down to 1340. Why would they not buy, guys? They are going to buy. So monthly, weekly, our bias is to the downside. Then let's go to daily. Can you see? The question is this: when you now come to daily, is the structure complete for you to sell? No. Our bias is to the downside. But is it ready for the sale right now? No, it is not ready. Okay, because you see this move, you see the correction, you see this move, you are looking for correction before this move. So this correction here, is it a complete correction? No, look at it here. You have already the move impulse here. You have the three-wave structure here. Then you should have this. Are you supposed to buy this? No, forget it. Why? We are looking for structural completion at this level. And if you want to have a clue, look at this impulse to the downside. Look at this impulse to the downside. In the area where you think this market will have made 50 to 61.8, if you look left, do you see a supply area? Can you see? You see a supply area? No supply area here. Let me do it. Let me make it very neat for you guys. Let's take a few. Hey, this guy, from here to here, we have our 50 to 61.8 here. But I can promise you guys, gold is not going to retrace to and stop at this level. Why do I think so? Why do you think I think so, guys? Why do you think I feel gold will not stop here? Look at here. Look at this impulsive leg down. I'm going to show you new thing. You know, this channel will show ourselves, we tell ourselves the truth, and we show ourselves the new secrets. Look at this move to the downside. That's what we call impulse, guys. Look at all the candles. Which one do you see that is very strong and powerful, that no buy candle was competing beside it? No one qualified in this area. Can you see? No one qualified. Because you are having the sell, you are having buy, you are having sell, you are having buy, you are having sell, you are having buy. There is in this, although it's pushing down, we are having more sellers than buyer. But as you are having seller pushing down, you are having some buyer surfacing, pushing up. Some sellers are pushing down, some buyers are pushing up. Only that we are always having, each time we are having sellers pushing down, we are having more seller in the market than buyer. That is not a supply zone. That is not a supply zone. A supply zone is exclusively an excess supply over demand. And you're not going to see any demand competing with supply at that level. That's what we call supply zone. And where is it here, guys? It is here. Look at this candle. Remember, we're having our 50 to 61.8 here. Look at this candle, guys. Look at this candle, very big. Look at the candle that formed before it, stop here. Look at the candle that formed after this big candle, stop here. Guys, this is your supply zone. So we're already having a clue from this daily time frame that we are likely going to have gold retrace to about 1923. 1923. That is a comfortable level where it's going to find enough seller to sell off gold. All right, those that are holding, they are going to start selling from here. So therefore, we need a reasonable inducement to take gold to the particular level I have given you. And if gold is buying to that place, it's only trying to complete a structure. Remember, it's trying to complete a zigzag corrective structure. What does a zigzag corrective structure say, guys? It's saying that we have with A, it's an impulse, with B, it's a correction, and with C, it's another impulse. And the impulse in wave A must be retraced to 50% retracement. Can you see? Can you see the retracement here? Boom. 50% retracement. And even the wave B in itself is forming a zigzag with a short A and a long C. That is why it's hitting 78. Look at it. Exactly at 78% retracement, it made a move. I was tempted to buy, but I said, no, I'm waiting for the sell. It's discipline. Tactically, I discipline myself. You say, no, I'm going to wait for the sell. I'm not interested in the buy. I left it. Why? Because it's going to struggle. The buy is going to struggle. Why is it going to struggle? Look at this massive sell-off. So when you are having an impulse, when you're having an impulse down, you're having impulse, correction, and impulse. If this corrective leg is coming with a very strong impulse to complete a corrective structure, don't bother to buy this wave C. Because this wave C, it will happen, but in most cases, it's going to struggle. It's going to struggle because this seller that pulls this market to the downside, they have not all gone away. Right? They have not done what? They have not all gone away. So that's going to make the completion of wave C to be slow and sluggish. Is somebody getting what I'm saying? So, but now let's wait for gold at this price level. As soon as it gets here, this is the supply level, this is the supply zone. What are we going to look for before we start selling? What are you going to look for? We're going to look for, you know, a candlestick pattern that matter right here, guys. Like engulfing, you want to look for engulfing, you want to look for a railroad track. If you have any other candlestick pattern that give you great confirmation, go ahead, no problem. Look at it. This is the one that worked for me, guys. Look at this. Look at this. Can you see these two candles? Let me draw it very well for you guys. I'm going to draw it very well for you. This is, do you see these two candles? Let me show you something. Take this fib, guys. Take this fib from here, this level to this level. Okay? Where are they? Where are they right now, guys? Where are they? 50 to 61.8. And as soon as we got there, see what happened. Boom. See another engulfing. Boom. And I told you, I love to see a situation where this candlestick that engulfed this one, okay, this one that is being engulfed now has a wick on top. That wick is a powerful rejection. And then that wick is the one that have gone to tap liquidity as supply. And so immediately you have that, once this bearish engulfing takes place, the market is never going to return to this level. It has no incentive to go back there. What is it going to do? Is it people that their stop losses have been used as liquidity that the market will now pity them to go back to say, oh yeah, I've given you opportunity to now, sorry, I came there and went back before. Now I've given you opportunity to now close your trade. It will never happen. Liquidity is grabbed. You have this when you bought from here, you know, some people put stop loss here. Then when you sell from here, people put stop loss here. So that your sell is premature. And because the sell is premature, it will just come all the way to the top here. The market will cut it. This stop loss is here. The market will tap your stop loss straight and move down. Because your stop loss here for the seller, your stop loss here in the algorithm, in the forex market algorithm, it is regarded as a what? As a buy. It's regarded as a buy. You are selling, you put your stop loss, it is regarded as a buy. It's a buy liquidity. So those that want to push the market down, you are providing liquidity for them to ensure that they see somebody to buy from. And they are selling, they see somebody to buy from them. Okay, so many people who place their stop loss here, their stop loss is getting hit here and there. You are providing liquidity to the seller. And what happened? Push the market down. But what the trick I have taught you is to avoid that problem, even though you have not studied liquidity very well. So by allowing you to wait, as soon as the market in higher time frame get to structural level, once it get to structural level, wait to see this selling pressure take place first. This selling pressure is a signal that though we have gotten to structural area, in addition to that confirmation, I now have a move to the downside, a selling pressure that indicates to me that we are now ready for the downside. But which exact level are you now supposed to enter? Are you just supposed to enter with daily time frame? No. It is at this stage that you are now qualified. Let's say we put a vertical line here, right here, guys. Boom. At this point in time, go to 1 hour. You can see how you are not going to be caught in retracement. You see, you go to 1 hour. So if you look at that, that engulfing that happened in 1 hour time frame, guys, you will see that I told you every engulfing candlestick pattern that happened in 1 hour will break a structure in smaller time frame. Not only that, it will break a structure in lower time frame, is going to make an impulsive move to the downside or to the upside, as the case may be. So the next thing you are going to do, guys, is to take a fib. Do you understand? The next thing is to take a fib. So you just have to take a fib. You are going to see where you put your fib. Look at it. Boom. So can you see that this is a regular flat? And I've taught you that a regular flat is allowed to stop at 38. It's a very shallow and sideways retracement. You can stop here. Can you see? See your move. See your move by just following a simple rule. A simple rule. See your move. Look at it. Another one. Boom, boom. Break this low. Strategy for trading retracement or correction. You have 3 wave here, 3 wave here. As soon as you break this low, this move to the upside is compulsory. Right? This move to the upside is compulsory. Let me show somebody. You have an impulse. You have 1, 2, 3 here, 1, 2, 3 here. As far as this 1, 2, 3 is corrective, guys, in 3 waves and has broken this low, this move to the upside is compulsory. Is compulsory. When I say compulsory, I mean it's structurally compulsory. If it doesn't happen, this market will not go down. In as much as this 1, 2, 3 here does not come to 38% retracement. This is a rule. It's a guideline. As long as this 3 wave to the upside here, as part of the corrective structure, does not even near 50%, it means that you are going to have a bigger corrective structure here. All you are waiting for is to have this 1, 2, 3 corrective, break this low. As soon as you break this low, look for your entry. Boom, to the upside. If you break this one, it's an expanding flat. If it doesn't get to the level here, it's a running flat. Simple. Do you get it now? So that's how to go about it. So if you want to make another entry, go back to your higher time frame. Don't remain in lower time frame. If you are remaining in lower time frame, you are deceiving yourself. Indication must come. There must be structural completion in higher time frame before you even attempt to go for the entry. 2, 3 years ago, I used to just come here. Now I just go to 1 hour time frame. I want to trade. I want to buy gold. 1 hour time frame. And here now, I'm looking for more imports here, correction here, so that I will buy. No, no way, no way again. It's not allowed. Now is for people who are aware and are still doing all sorts of things like that. It has become, like an abomination to do that. Here is a sell setup on weekly, on monthly. But right now, it is not ready. On the daily, we want a buy. We want a buy. But is that buy good? If you are not a very good scalper like Mark, don't attempt it. Because you are going to bite your finger. Because he has the psychology to know the right time to get in and the right time to get out. So when you are still holding your small profit, he knows that this thing is going to retrace because he has mastered his craft over time. He got out. So if you have not mastered scalping, don't bother to trade this. Let it complete. As soon as it's complete, it's going to be a free fall like here. Everything you see here, guys, is going to repeat itself here. So if you know that is going to happen, why must you suffer yourself? Do you understand now? Structural completion before entry. USD card. Somebody asked me that I want an indication to show me a selling pressure or a buying pressure. Why is it that here did not give us engulfing for us to know this move is going to come? Brilliant question, guys. Brilliant question. The market is not going to give you signal every time. Hear me well. The market is not going to give you signal every time. Like right here, guys, we got a signal. We got a signal that this market is going to move down right here, right here. We got a signal. Where was the signal we got? Structurally, we had this move to the upside. We have this move down, impulsive. So we want a three-wave structure to the upside. Look at it. It gave us this three-wave structure, 1, 2, and 3. Then after, this move must come down. It's simple. We must have this move. Somebody is saying, Nat, I'm confused. You are too fast. I've not mastered Elliott wave theory. You are too fast. Don't worry. I'm going to do it again. Right now, I'm going to do it again. I'm going to do it again. In Elliott wave theory, what we do is wave balancing. We balance the wave. We balance the wave as they are happening. Okay? And let me show you how we do it. You see this? You see this wave to the upside? You see this one down. This one down does not look like three waves. Abi? Correct. Look at this one in the middle. Oh, let me use another two. Where's trend line? Yes. You see this one in the middle? See this one in the middle? That's the correction. All right. Then you see this one to the upside. This one to the upside must come here. And that's what you see here. Boom. Break this top. Complete. Can you see? On daily time frame, you have an impulse, you have an impulse, you have an impulse, 1, 2, 3. This is the only place we see a confirmed correction. This is the only place we see a confirmed correction, 1, 2, and 3. Because I told you A is an impulse, C is an impulse, B is a correction. Is this one not looking strong to the downside? Is this one not looking strong to the downside? This one, does it look strong like them? No, because this one has formed a three-wave structure, 1, 2, and 3. Can you see? So this is wave A, this is wave A, this is wave B, and this is wave C. A is always impulsive, B corrective, C impulsive. Okay? So after that, you see this is a big move to the upside. That is a big A. Can you see? This is A, B, and C. It's already in three waves. And I told you wave B is already in three waves. It's always in three waves. You see wave B here. And then you see wave C here. This is complete structure. What happened to this one? What happened to this one, guys? To the downside, it must have to come here. You see, it's very short. This one too must be very short. But why do I tell you that? We got a signal that shows us that this move to the downside is going to come. Look at it, guys. Boom. Boom. Can you see? It happens. Boom. It's the signal that tells us, or that told us, that we were going to have a move to the downside. Now, what did I tell you to do? Immediately you see there is structural completion. Good. You have nothing to do with your daily again, because daily has given you a clue of a move to the downside. It has given you a clue of a move to the downside. So what do we do next? Go back to, let's just put a mark on it. Let's put a mark on it. Let's put this, guys. Go back to 1 hour, guys. You see something now? You are going to see development of an impulse in a smaller time frame. It must happen like that. Can you see? Can you see development of an impulse? That's number one. You must see a break of structure. That is number two. That break of structure is not going to happen. You're not going to wait for it in bigger time frame. You are going to spot it in your entry time frame. And where's the break of structure, guys? And where's the impulse, guys? Look at it. This has broken the structure. Look at the structure. This is what we call the structure. Okay, this structure is broken. Boom. Can you see? So because it has broken the structure and it's an impulsive move to the downside, all you are required to do here to get an entry, guys, so take a fib of this leg. Boom. Where's your 50 to 61.8? Remember, you are jumping. What are you jumping? Define a correction. When you go to smaller time frame, you are going to see that this is not an impulse, it's a correction, because it's going to start from here, starting from here. So you have this move, you have this correction. So it's no longer an impulse, okay? And this straight move to the upside did not correct again. So this is wave C. This bullish move is the wave C of a zigzag. This small move is the wave A. You have the correction, you have fine. And you got into where? You got into where? 50 to 61.8, 50%. So you are good to go. If you put your stop loss here, boom, you catch this. Simple. Can you see how we have navigated our way from from bigger time frame that gave us a clue of the direction of the market. First, we have done our structural analysis, and we knew where the market was going to stop. And as soon as the market got there, we were waiting to see a selling pressure in the higher time frame that indicated that we have to get ready. Okay, that selling pressure that you see, that engulfing candlestick pattern that you see in a daily time frame is more or less like a yellow light in a traffic light. All right, yellow light. I don't know those that are in abroad. I don't know the kind of light they use. In Nigeria, we use yellow light to say get ready, get ready, get ready, get ready. That is your get ready here. Let me show you your get ready. Look at it. This is your get ready. Get ready. Look at it. Get ready. Your get ready is on the daily, guys. On the daily. You now go back to 1 hour. That's where you see on your mark, set, go. See on your mark, set, correction, go, boom. Can you see this stuff, guys? So it's not hard. It's not hard. You don't need a degree. You don't need to have masters to trade forex the right way. All you need, guys, is common sense. You need common sense first. You need to be smart. Secondly, you need not to be greedy. Thirdly, if you maintain these three, guys, you're going to be rich. I tell you, I do not trade forex with headache again. For what? For what? Anytime I'm going in, I must come back with small profit. Anytime I'm going in, I'll come back with small profits. Do you understand? My only problem at times is trading a small account. The kind of profit that comes from there is usually too small for me. Until somebody said, he's not making anything because he's trading a small account. That how do we do? I say, okay, I will experiment. Don't worry. I'm going to look for a small account to trade. I'll look for like, $100 or so and put it there. And thankfully, I was able to get $70 and I'm moving it. Do you understand now? So this is the way you go about this stuff. This is the procedure and you should follow it. If you don't see what is happening on the daily, don't bother yourself to go to smaller time frame. Don't bother yourself. And then some people will now ask me, now, if you look at this structure now, for those that trade trend line, oh, they say, Nat, we are now at the top of the trend line. Should we sell? No, I don't do this. Why is it that I don't do this? This, if you look at this candle, this bullish candle, compare it to this bearish candle, are they the same? They are not the same. So for the fact that they are not the same, it's telling us that there are more buyers that are watching this market than sellers. For now, sellers are in control. But you cannot say yet because buyers are still standing by. They're still looking for opportunity. So what if you get in for a sell here and the market go to this level and make a boom to the upside? Then you have lost. So I want to see a situation where if not today, if today we have this bearish move, and tomorrow we have another bearish move, or maybe another bullish move, and next tomorrow we have another bearish move that totally engulf this one. Yes, I can tell myself that fundamentally, euro is meant to sell against the GBP. Because right now, both of them are experiencing pressure of inflation and all those things. But right now, the balance of payment, the balance of payment figure for UK is better than that of euro. In fact, euro among the major economies, euro is the worst in terms of balance of trade. So how can I invest my money in a country that has the worst balance of trade? Their current account is nothing to write home about. Right now, their Eurozone balance of trade is minus 16,000, moving from previous minus 8,000 to minus 16,000. When a country like Canada is having a positive, balance of payment because of crude oil export. A country like Switzerland is having a massively positive balance of payment, when a country like Japan is having a balance of payment. So even though the interest rate of euro is 0.25 and the interest rate for Japan is minus 1 something, I would still like to buy Japanese yen at the expense of euro, because euro is having a challenge economically because they have failed to jack up their interest rate for quite a long period of time, and it's having a toll on them. Are you getting it now? So because fundamentally we want to sell off euro GBP, but we are looking for a signal technically for us to buy. And what is the signal? Right now we are at the top. This is completion of structure. Fine. Boom, boom, boom. This structure is complete right here. Okay. This structure is complete right here. Boom, boom, boom. We are looking for this leg to the downside in alignment with our what? Fundamental analysis. But now, where is the signal to start to sell? The signal has not come. The signal has not come. We want to see if this just keep going down, and engulf this one. Beautiful. We step down to smaller time frame and what? And do the needful. Okay? We step down to smaller time frame and do what? And do the needful. It's as simple as that, guys. But as long, wait, if again, we are seeing a small bearish here, and tomorrow, maybe it got here, and tomorrow we saw another bullish here, fine, we wait. It's targeting. We already know what we are doing, but we want to target our entry. But we must see a confirmation first before you go for your entry. If next tomorrow we now see a bearish engulfing here, powerful. Oh my goodness, powerful. Oh, dollar is coming. So what we just have to do is to wait, go to 1 hour. As soon as we see that engulfing, we must have seen a powerful impulsive leg here that break the structure. Always note that impulsive leg must break structure. If it does not break structure, then it could be a wave A of a correction for more upside. Oh my goodness, I don't know how to explain this, guys. I'm just so happy showing you these things, guys. If this impulsive leg, if the what do you call it? If the engulfing candlestick pattern you see in daily, if you come down to 1 hour and you are seeing an impulse, if that impulse in 1 hour does not break structure, where is the structure, guys? This is the structure. This is where you got the liquidity to move to the upside. If that 1 hour does not break this low, guys, the implication is that if you stop here, the implication here is that this move might just be a wave A of a correction. Move down for more upside to break this top. Are you getting the gist now? But if you step down to smaller time frame and you are recognizing an impulsive leg that come down to break structure here, you now know, oh, this must come back to 50 to 61.8 if it's other structure, and come back to 78 if it's a zigzag structure, and give me a powerful move to the downside. To the what? Downside. It's simple. So this particular, clue, I did not include it in my video, in my YouTube course on this particular area. But I'm telling you now because you are opportune to attend Wednesday live session. That is where I reveal my trading secrets. Not everybody knows this. If I tell people in the group that Wednesday live session is where I reveal my trading secrets to people, you will see the place will be 50, 100. Those that are serious, let those ones be attending. They will be getting the secret, and those secrets are the raw. They are raw. They are not diluted. They are the real thing that happen in the market, irrespective of the strategy you trade. And remember, I have told you, don't just stay on one strategy and say you are trading. No, don't do that. Combine things together and form, a system of trading for yourself. That is the best. Are you okay now, guys? So I've come to the conclusion of this lesson. I'm going to pause the video here because I will upload it to YouTube. Then I can give you a chance to ask question on anything you want to ask me based on the lesson of today. And if you are here, you have not subscribed to this channel and you have been benefiting from the channel, please just subscribe to it. You know, like and share. Let YouTube share it to other people. Let them gain knowledge, and probably their trading will be better for it. Okay, so thank you.